What big investors have that small investors don't? Big investors like Warren Buffett have so much money to manage that they often get a lot of perks that normal investors wouldn't get. From my own personal experience, I've always been working for big investors or large institutions as an investment analyst, so I've definitely had a good share of these benefits. And no, that doesn't mean taking the client's money and spending it on crazy office parties like in The Wolf of Wall Street. For an idea of what a day in the life really looks like for big investors, imagine the guys from the movie Big Short working on Michael Scott's team.
Kidding me? You come in here, you fucking seriously looking to show you got a matching little butler boy, you butt fuck.
Just for context, as an investment analyst, I'm like one of these three guys. And no, we don't yell at bankers. We just suck up our mistakes and stop trusting people who screw us over. What they were doing throughout the entire movie was that they got to manage $1 billion of investment money, they got to talk to high-ranking bankers on Wall Street, they traveled around the country to validate an investment idea, and they also get to ask questions to big CEOs about their company stock. So I thought of 4 major benefits that big investors have that small investors don't. Before we start, smash the like button and subscribe to my channel. Let me know in the comments below how you would invest differently if you had all the resources in the world. The first benefit is that big investors have Bloomberg terminals. For those that don't know, Bloomberg terminals are essentially computers that run Bloomberg software to get live data about the entire world. Data such as stocks, politics, economy, oil, gold prices, if some CEO quits or tweets something crazy, you name it, they have all that information live as things change. A single Bloomberg terminal costs $24,000 per year, so just a team with 1 terminal per person can be a huge cost. It's no wonder Bloomberg is so much richer than Donald Trump and the other presidential candidates. In The Big Short, Christian Bale's team and Mark Baum's team had Bloomberg terminals, and even the guys with Brad Pitt had at least one despite being small investors. Besides the live information, the Bloomberg terminal has a lot of access to expensive research papers, and they have tools to help you analyze certain investment ideas. In one of my earlier videos, I had a tour of my Bloomberg terminal showing what kind of tools I used. A super cool Bloomberg tool that I found was a hurricane tracker, which told you where a big hurricane was moving and what investments in your portfolio were going to get hurt. For instance, if this is a map where a hurricane is starting and you were a big investor in Couche-Tard, then it would show you all the Couche-Tard convenience stores and Circle K gas stations in the hurricane's path. If say all those locations represented 10% of their business, then you can expect the stores to stop operating because people are evacuating and sales and profits would drop until the hurricane stops. The second benefit that big investors have is professional access. Like an elitist club, it's always the same bunch of high-ranking individuals meeting and talking to each other in the investment industry. At one point, you just recognize people by their serious faces because they all look the same.
You. Yes, me.
Just by association, you eventually turn into them. There are a lot of events where you can talk to other institutional investors, or you can speak to industry consultants to try to get an informational advantage. It's kind of like a place for investment rumor mills.
Ain't no rumor, that's a bona fide legend.
For instance, if one consultant spends his entire career working with farmers, then he gets early access to knowing how the crops and livestock are doing this year.
They're analysts, they don't know preferred stock from livestock, all right?
Then he gets early access to knowing how the crops and livestock are doing this year. By talking to someone like that as an investment analyst, you can have an edge as to how food costs and menu prices might be like for certain businesses like restaurants and grocery stores, and whether the average person will have more or less money in their pockets. Depending on what you hear, it can help support a buy or sell decision for certain investments. Essentially, the whole point of professional access is to try to learn of investment opportunities that are hot or cold before everyone else starts dogpiling in on them. The third benefit is corporate access. Because you manage a lot of money, you would be able to buy a lot of shares of any company.
I'm looking at 200,000 shares move, pal. I want to know if we're part of it. We better be, and I'm going to come down and eat your lunch for you.
This can make you into a big shareholder of companies who is important enough for the executives to care about your opinions and concerns. This means having regular access to communication with the executives, like CEOs and CFOs. Another cool thing with having corporate access is being personally invited to attend events, such as lunches, fine dining dinners, all-you-can-eat and drink networking events, box seats at baseball games, conferences, and company tours. Personally, some of the tours that I've been on were visits to manufacturing buildings and gold mine sites, although my dream would be to visit the Wonka factory. The last benefit is to have influence on a company's strategy and plans. With a large ownership stake in a company, you can change the direction or influence on certain decisions. There are plenty of investment firms out there that are aggressively trying to turn around inefficient companies, sometimes with hostile intentions, such as firing the lazy yet overpaid CEO or slashing costs from top to bottom, which often imply layoffs. From my experience with influence, there was a large gold mining company that I was looking into, and my firm was a top 10 shareholder. The CFO asked me for the suggestions on what to do for their cash deployment strategy, and I spent some time laying out some options for them. Another time, I was talking to a major grocery company CEO and CFO in a group meeting. This time, my firm wasn't a top shareholder, but we managed a lot of money, so it's in their best interest to attract investors like myself to buy in. During my meeting, I raised concerns on certain cost efficiency plans and suggested dividend raises and stock buybacks to improve investor sentiment. I mentioned that these strategies would warrant enough interest to get big investors to sell out of their other grocery investments and buy their grocery stock investment instead. These suggestions that I often give to executives were sometimes answered in the following weeks or months. So that's about it in terms of benefits of being a big investor. For all the benefits that you get, there are often downsides to being a big investor, of course, but I'll talk about that in a future video.